Oil closed the Tuesday session with gains. Today, the oil prices continue to climb up. The oil quotes managed to advance following a report that a bomb exploded on an oil tanker in Syria. The ruble rose significantly as the market opening amid an increase in oil prices and risk appetite. Crude oil prices always move up amid news on rising tensions in the Middle East, so traders were not surprised by an uptick in oil prices yesterday. Yet the storage problem still winds on the energy market. The high volatility in the oil market prevails as traders continue to roll over their contracts on oil for June. Investors fear that as contracts approach expiration, oil prices may again plunge into negative territory. Currently, market sentiment is positive after the release of data from the American Petroleum Institute. The report showed a smaller than expected increase in the United States inventories. Investors cheered this news, and today they are anticipating a report from the U.S. Department of Energy. In case of another increase in reserves of more than 10 million barrels, the problem of non-demand for raw materials will become even more pressing. The oil quotes are sure to respond with a decline. On Wednesday, WTI crude price jumped, recouping part of its weekly losses. WTI futures added more than 12% at the start of the day after falling by 27% in the first 2 days of this week. It was trading at $13.93 a barrel. Brent crude futures for June grew by more than 3% but then slowed down. It costed $23.19 a barrel. A rise in oil prices also occurred amid expectations on a recovery in oil demand following the easing of quarantine measures in a number of European countries and some American states. Additionally, traders hope that OPEC Plus production cuts from May 1st will also bring results. Now they are trying to figure out when oil prices may rebound and start to recover. In the meantime, the ruble is up amid a positive market tone. For this reason, the dollar-ruble pair is expected to gain momentum. Besides, the ruble may receive additional support from the sell-off of the foreign currency by the central bank and demand for ruble liquidity from non-residents ahead of the Ministry of Finance bond auction. The greenback sank by 88 cents and went below 74 rubles. During the session, the US dollar may reach the nearest support of 73 rubles. However, the ruble remains vulnerable to any fluctuations in the oil market, so the oscillation of oil quotes may increase as the expiration date of Brent futures for June is approaching. The Russian currency is unlikely to be affected by the highly anticipated event of the day, the Fed's monetary policy meeting. The US regulator has no reason for an additional rate cut now. Taking into account today's positive market mood and expectations of a further rate cut by Russia's central bank, investors may take note of two offers at Treasury bond auctions with an unlimited offer. The demand for government bonds is sure to boost the ruble. That's all for now. You are watching Market News on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals. See you in our next release.